Hi, this is P.R. Sundar. Welcome to this special episode where we are going to discuss a very important topic. Should we continue our SIP or should we consider stopping the SIP? You talk to many people, 99% of the people who are advising you, they will say, don't stop SIP. But I have a different opinion. But my opinion is not that you have to stop SIP, but you have to make some changes to your SIP. So, what kind of changes we can do? Okay, the first thing is that most of the people who have come to the stock market, they are called COVID investors, which means that most of them have come to the market after the coronavirus. Once the markets crashed during the coronavirus period, so that is when people have got enough free time. They started learning stock market. They started coming to the stock market. Then from that day, the market was a one-way rally from 7,500 Nifty COVID low to 26,300. It was a non-stop rally, in between a small correction only. There was no meaningful correction. If I'm not wrong, there was no 10% correction at any point of time from that low to now. Now only, the people are seeing some meaningful correction in stock market. So far, Nifty has corrected about 10-12%, Midcap corrected about 20-22%, small cap corrected 25 to 27%. Now, the question is that should we continue to do our SIP? Now, before giving the firm answer, is it right to do or not? The first question is that where are you doing your SIP? If you are doing SIP in small cap, or if you are doing SIP in mid cap, or you are doing SIP in large cap, or you are doing SIP in multi cap, or you are doing SIP in hybrid funds. It means like some they invest in stock market, some they invest in debt funds. So as and when the markets are higher, they will book the profits in equity, they will move to the debt fund. As and when they find it very attractive, so they will move the money from debt fund. Of course, they cannot move the full, but they will have some minimum percentage. I think minimum 60% they have to keep it in equity in order to get the taxation benefit. So, when the markets are good, they will book the profit, they will keep 40% debt. When the markets are lower, they may keep, 10-20% debt, the remaining they will move it to equity market. So, stopping SIP, is not a suggestion to everyone, okay? But however, if you are doing small cap SIP and mid cap SIP, you may have to make some changes to the SIP. So before that, let me just show you in the computer, how the mid-cap stocks moved in the last 10 years. So let us go to the computer. This is the mid-cap 50 index chart, and this is a weekly chart. I put not daily because we are looking at the longer time frame. I put it in a weekly chart. Now, if you see, this is the there was something called taper tantrum in 2013. So the markets rallied actually. Or even, let us forget about this. This is or you want to go even bigger. This is the Lehman Brothers collapse. After the Lehman Brothers collapse, market shot up. But then once this peak has attained, then market started consolidating. You see, this is entire period is a consolidation. So that's lasted for how many years? From 2010 to 2014. So imagine if anybody started continue to do SIP, here SIP, here SIP, here SIP, here SIP, here SIP, here SIP. After 4 years, at least those who have invested lump sum here, they would have got back their money here. But those who have done SIP, they would not have got even until here. Okay, here also, it will be the same. Then opportunity cost. So what I mean to say, Lehman Brothers collapse, short up, consolidation, short up, consolidation, right? And now we'll go for more nitty-gritty, right? So let us start from 2016. Okay. Now, see from here, 2014 to 2016, the market did not go anywhere. It was almost flat. Then 2016 to 2018, there was a huge rally. This rally is almost 100%. If you can see the numbers here, so this is around 2,700, from 2,700 to 5,700, more than 100%. Then what happened? Market started gradually falling. When the market started falling, the people said, no, you can continue SIP, continue SIP. Somebody who has started SIP here, you see, they continue to do SIP here. They would not have got any better return. Then what happened? The market, consolidated for 2 years. Then coronavirus came, and then it shot up. Then it reached a peak of around 2021. Then if 2021 after peak is achieved, you can see up to 2023, almost 2 years, that price has never come. It was down. Then came a bigger rally. So this rally is also more than 100%. So the market touched a high of around 17,000. So then from 17,000, now it has come to around 13,000. So imagine, so here there is a weekly chart. So you put it in, or you can put it monthly chart. You put it monthly chart. So you do SIP, you do SIP here, SIP here, SIP here, SIP here, SIP here, the market continue to fall. Okay. Now, what I'm trying to tell you, looking at the past performance, at least for next 2 to 3 years, so this level is not going to be taken out. So what happens? This is the nature of mid-cap and small-cap stocks. Okay, so they go for rally for 2 to 3 years. They go for sideways to lower for 2 to 3 years. So in that cycle, it moves. So in the up cycle, you do SIP is okay. But it's very important that you have to book the profit as and when there is more than 100% rally in the index. So most of the people follow SIP diligently, but there is also something called SWP, Systematic Withdrawal Plan. Once the index has shot up more than 100%, mid cap or small cap, that is the time to book profit slowly and move the funds to debt fund. Then don't stop the SIP, but don't put the SIP money into mid cap and small cap. So put that SIP either in large cap or you put that SIP into debt mutual funds, right? So the two-year period, from where the correction started, you keep on doing SIP, you will keep on losing. But instead, you keep on putting the money in debt mutual funds. Now, maybe after 2 years, when the markets are at a very, very reasonable level, you can see that you will start hearing people talking, a 2-year consolidation, now market will break out or this and that. So that time what you can do, you can start the double SIP, which means that, let me give the example. Let us say every month you put 100 rupees, right? So once this kind of uncertain, like you don't know what Trump is going to do for the world for next few months. So once this uncertainty is there, then, okay, you stop putting the money into equity fund, put every month 100 rupees in debt fund. So let the market consolidate, let the market fall, let the market find a bottom, let the market reverse. Okay, it will take, I'll tell you, at least 2 years. Right? That is what the past experience shows. Once mid cap and small cap started correcting, that correction lasted 2 years. Once they started moving higher, that rally also continued for 2 years. Then what happened after 2 years? Okay, if still market are not recovering, after 2 years, what you do? The 100 rupees which you are putting every month, also put it in as mid cap, small cap SIP, plus you move 100 rupees from the debt mutual fund. So that means, you continued the SIP. Once the market peaked out, market started correcting, stop the SIP, continue the same amount SIP in debt mutual fund for 2 years, and after 2 years, you put your 100 rupees also into Midcap mutual fund, plus move the 100 rupees from the debt fund to Midcap mutual fund. So then, you can do this for 2 years, because for 2 years worth of money is there in debt fund. And not only that, by that time you would have gained a lot of interest also. So along with that interest, you will be able to put even more money. So if you are doing mid cap, small cap fund, I showed you the chart for last 10-15 years. So this is how it moves. 2 year uptrend, then 2 year downtrend, again 2 year uptrend, again 2 year downtrend, and then moreover now you see nothing is going well. So especially, this Trump, we do not know what is in store. If any small country do this kind of thing, nobody is going to worry. But the world's largest economy, US market, they are doing all these kind of things. You will never know where the market bottom is. Then psychologically you will be drained. And the people say, no, like sometimes, you see talk funny people, no, stock market is for 10 year, 20 year, like who will have a patience for 10 year and 20 year and to see the profit? And then, assume that a stock market, you put the money in stock market, it continuously give 9 years loss. After 9 years, you will get, fed up and you will exit. And then 10th year, it gives the profit. What is the big deal, right? So therefore, your net asset value also cannot keep on going down. Psychologically, that will drain you. So that is why I'm saying, if you are doing mid cap and small cap SIP, okay, and not the right time to continue the SIP, okay, either you move to debt fund, or if you still feel, you have to participate in the market, then what you can do, 50% of your money you can put it in large cap SIP and 50% in debt fund. And always remember, keeping some portion of your SIP in debt fund is always good. And as far as I know, 99.99% of the people who do SIP, they do SIP only in equity. They don't do SIP in debt fund. So it is always a good idea to do some SIP in debt fund, and then, like maybe for example, I'm just giving you an example. So let us say market has gone to 26,000. Now it has come to 22,000. Okay. Now, so if you start putting the money in SIP in debt fund, so let us say market come to 22,000. Okay. Maybe 25% of the debt fund you can move to equity fund. Then, after that, if it goes to 21,000, then we can move another 25%. If it moves to 20,000, you can move another 25%. Until then, let this debt fund continue to gain some interest, right? So markets may suddenly reverse. You may lose the opportunity cost, but it doesn't matter, right? What investment you made already, that is for surely it's going to recover. And plus whatever money you are putting in debt fund, that's also going to gain some interest, right? So once you see there are no uncertainties, definitely now there are a lot of uncertainties. Why Trump is behaving like this? Why FIIs are continuously selling? So just imagine, for the last 6 months, 7 months, FIIs are selling continuously domestic institutions with the help of retail money, which means that retail people keep on buying. Right? You just let me know who is more informed people, FII or retail people. So the informed people, very rich people, they don't want to hold the stock. They want to liquidate. And then what for we have to buy the shares and we have to keep on holding those shares, hoping that, after 5 years, after 10 years, it will revise. Right? So there are many times, it may not reverse at all. Or even by the time it reverses, our currency would depreciate so much, in dollar terms, you may not get anything. So therefore, don't listen to the financial advisors, who keep saying, no, don't stop SIP, don't stop SIP, right? So definitely, you have to make some changes to your SIP. So that's my logic. I'm not saying that you have to stop the SIP completely, but put some money. So, and alternatively, if you have been doing SIP in small cap, okay, Now you do one thing for the next 6 months, move the SIP to debt fund. Next 6 months, move the SIP to large cap. Next 6 months, you move the SIP to mid cap. And then after 1.5 years, come back to small cap. In order of preference, right? Debt fund, large cap, mid cap, small cap. So the debt fund is the lowest risk, lowest reward. Large cap, small risk, small reward. Mid cap, medium risk, medium reward. Small cap is high risk and high reward. So the high reward will come only in the uptrend market, not on the downtrend market. Now, definitely this is a downtrend market. And you see market has fallen, not able to recover at all, right? And then, so you just imagine, when was the last time? In the last 3 months, FIIs are selling every day. Since January till today, FIIs were net buyers only for 3 trading sessions. Out of the 3 trading session also, 1 trading session was because of some block deal. So if you leave that, FIIs were net buyers only for 2 trading sessions in last 3 months. And then from October till now, so how much they have sold? More than 2 lakh crore, right? And in last 1.5 year, how much money they have sold is equivalent to what they bought in the last 10 years. Right? So when FIIs are so bearish, when Trump is so volatile, there is nothing great in India future also, corporate, because, everywhere taxes are being increased. With this setup, so definitely I would advise you not to continue your SIP if you are doing SIP in a small cap or mid cap. So if you are doing a large cap, then it is fine. Nothing to worry much. But even then, I will advise you 50% of the money only you continue the SIP, remaining 50% switch to debt SIP. So so far you have not heard of debt SIP, but now I am suggesting debt SIP is also something good. And also always remember, as and when more than 100% rally in index, it is time to book the profit. If you do not know how to book the profits, then the market falls, it crashes, it will come back to the same place. Then like 4 year, 5 year, you lose the opportunity cost. Have you put the money in bank FD, you would have got better return, right? So that is my humble suggestion. I may be wrong, but whatever I said, you analyze yourself and you take a call yourself. So hope you enjoyed watching this video. Thank you for watching.